What on earth is happening to Google? They are being forced to sell their Google Chrome product, so where will this lead their stock? In this video, we're going to be taking a look at the news surrounding Google currently alongside with their previous finances to help us see whether or not this is a stable stock for your investment. So to begin this video, it is important that I give you the background context for this Google Chrome sell-off. So I'm going to be showing you a video here by the Bloomberg channel on YouTube.
Alphabet shares lower in after-hours trade. That's after Bloomberg reported that the Department of Justice is set to push Google to sell its Chrome browser to break up its search monopoly. Let's get the details and bring in Bloomberg's opening trade anchor, Kriti Gupta. Kriti, what do we know?
We know that this could become one of history's biggest antitrust cases, a title that's currently held by Microsoft in the late 90s at the moment. What's crucial here is that the Justice Department has decided to ask Amit Mehta, who's the judge who earlier this year had ruled that Google illegally monopolized the search market. So some pretty strong evidence, a pretty strong case to begin with. But I think what's changing is how do you remedy it? And that's where this issue comes up, that they may actually be able to peel off Chrome. Here's why this is so important when it comes to the Google and the Alphabet broadly kind of licensing. Chrome is the largest internet browser in the world. 61% of traffic goes to Google Chrome, and it is competing with the likes of, for example, Safari, Internet Explorer, Mozilla Firefox. But this is really the main way that Google is able to not only detect who is searching what, but also collect that data and then give them targeted ads. That is the crux of the case that Amit Mehta had ruled upon back in August. The concern here is what this may actually do in terms of breaking up Google, given that so much of their ad revenue comes as a function of this one platform, given that vertical integration. That is the concern here. We'll see if that actually comes through. Right now, it is just a recommendation to the judge from the DOJ when it comes to actually pulling back on things like data licensing and potentially doing Chrome. It is not for sure. It is just a recommendation. That being said, some pretty strong words coming from the Google kind of VP as well. Take a listen to what she had to say. Quote, the DOJ is continuing to push a radical agenda that goes far beyond the legal issues in this case. More fighting words here. The government putting its thumb on the scale in the ways that would harm consumers, developers, and American technological leadership at precisely the moment it's needed the most. Tom, this is crucial timing. We know but being tough on tech has been a bipartisan issue for both Democrats and Republicans. We'll see if that eases under a new administration.
Yeah, initiated under former President Trump, and now, of course, he's coming back in. So, as you say, we'll see whether or not this progresses, and the time frame is looking at April and then August in terms of when this potentially wraps up, 2025. Bloomberg's opening trade anchor, Kriti Gupta, thank you very much indeed.
So that is the news surrounding Google at the moment. They are being pressured to sell Google Chrome due to a monopoly on the market. Personally, I do not see how this is going to be pushed through. I think it is kind of ridiculous. So with that in mind, let's take a quick look at the year-to-date chart for Google. So here we can see a year-to-date increase of 26.56%. And as of today, we're up nearly 1% with Google shares, and it does seem to be a bit bullish at the moment with a bearish open. The P/E ratio is okay at 23.69, and the EPS is strong at 7.53. This is to be expected with a company the size of Google. You wouldn't expect it to be in the hundreds like a new company such as Palantir or SoFi, as it's well grounded within the market already, and the price is reflected within what the company already does. So what you can take away from a P ratio such as this is that it is a very stable stock. So looking a bit further in depth, we can look at the quarterly balance sheet for Google. And on here, we can see that Google has a really good liquidity rate by taking the total cash divided by total debt, this leaving them with, on average, around $3 to play with to pay back their debt. That is incredibly strong, as that means they have at least $1 in liquid cash to pay back $1 in debt in which they owe, which is very important, as in the world of business, cash is king. So when we put this into a graph, we can see that this is steadily decreasing at the moment. However, I do not think this is anything to worry about in the slightest, as it is still massively above the target of 1 in which every company aims for. This is due to many factors. such as the fact that Google is primarily a software company, meaning that they don't really need to take out much debt as there isn't much R&D going on. It's a very similar reason as to why Warren Buffett invests in gaming companies, as there isn't a continuous development going on. Once the product is out, it makes money. It's almost like a YouTube video. Once this is out, it can, well, it doesn't make money because I don't have enough subscribers, but it will make money itself. I do not need to continuously work on it for it to work, essentially. With that being said, though, please do subscribe. I am trying to get to 300 subscribers by the end of this year. I know it's ambitious, but there's no harm in being ambitious. So now moving on to a retention rate for Google using the income statement. We can see really, really good profits for Google around the 30% mark, consistently in its high 20s. This is really, really, really good, as you want to see a company at least above 10% if it is a oldish company, and for Google to be at 30, it is just really impressive. But as I said before, this is due to the fact that once their products are up, it is up. There isn't massive amounts of R&D that go into their products. So realistically, where, apart from taxes and paying wages, does the money have to go? So now moving on to Google's free cash flow. Here we can see another really strong outing. With it being relatively volatile, however, it is increasing year on year. And not only is it increasing, but it is stupidly high. This is really good for Google, as it can be used for stock buybacks, paying out dividends, or paying down debt in which they don't have a massive amount of. In fact, when looking at their debt from the liquidity ratio, we can see that they can almost pay off their total debt with their free cash flow. So this is just incredibly strong for Google. Quick sparkling water break. What's your guys' opinions on sparkling water? I cannot get enough of it, but I know it's not for everyone. I would just like to know everyone's opinions. So that was Google's finances. Absolutely amazing. Nothing to worry about. In fact, it's something to be impressed by. Now we are moving on to MSN Finance in order to see what the analysts think about Google. So here we can see a projection of a 90-day chart, and we see a projection going either up or down, which is amazing. It's really hard to say, though, with this news coming out about them maybe potentially having to sell their rights to the Google Chrome application. But in my opinion, I do see Google going a bit like this. I do see it on a relatively good climb, and I think a Trump presidency will help Google, as it is a American through and through stock. But there is that question mark around Chrome. They might have to sell off some of their abilities within Chrome, such as the tracking being so advanced. But that's something that only time will tell. Taking a quick look at what they reckon on a sell, hold, or buy scale, they all seem to be saying around the buy-ish, with 60 analysts being in on this. And another projection here, basically backing up what I was saying with a progressive increase. When taking a look at Google on TradingView and using the Omega ratio, we can see a rating of 0.38, which is not particularly impressive. However, it is a stable company. You wouldn't expect this to be high, as it has basically exceeded all growth expectations already. I mean, it is always projected to go up, but it's not going to have a sudden spike like stocks like Palantir or Nvidia in previous years. When comparing Google to Microsoft on a logarithmic chart, we can see that this is relatively stable, and to be fair, Google has actually taken a big hit against Microsoft in around 2018. Microsoft being one of Google's largest competitors, of course, with Bing. But it is relatively stable now. I know it's ironic, but looking on Google Trends at how often Google has been searched, we can see that it peaked in 2014 in September, and it is now on a slight decline, but again, it's stable. Weirdly, the largest place for searching Google is Tunisia, Albania, Morocco, Algeria, Cambodia. Not entirely sure why that is, but interesting. This is just important to look at, as it shows demand for how often Google is still being used. If you suddenly saw this drop off, it would be a bad time. So with that all being said, I give Google a rating of a solid B. This is just because they have an outstanding financial history and great products such as YouTube, which you're watching this on, Google Chrome, which might be under fire very soon, as we just heard. That is the only reason why I won't be buying into Google right now, is just due to the fact that I'm not entirely sure where this Chrome story is going to go. I don't think it will be an issue for them, but it could have repercussions. But with that being said, I'm not a financial advisor. You must always do your own research before buying into a stock. I'm only just not buying in because I don't have much liquid cash to put in at the moment, but I do already hold Google from previous times, and I will continue to hold this. So that is the end of this video. If this has helped or just been entertaining in any sort of way, please leave a like, subscribe, it's greatly appreciated. And I will see you for the next video.